Namaste, friends. Good morning. And we continue our understanding for the topics. So, we have completed three major hits so far. That is PGBP and capital gains and salaries. Our concentration for the morning is going to be on the two smaller heads, that is house property and other sources, along with set off and clubbing provisions. We start from income from house property. We start with income from house property. Well, for all of us, there is one major amendment which I want to bring it to our notice, which we have seen in our regular classrooms, but it's a major amendment in law, technically for people who have studied under the old law and the new law will understand that now self-occupation can be claimed for two house properties. This was not the case before. This was not the case before. It was only available for one house property. Other house property is deemed to be let out if you claim for two. Okay, but now the self-occupation benefit can be claimed for two house properties. Friends, the benefit of what is the benefit? The benefit is NAV being zero, nothing is taxable. So benefit of self-occupation is extended for two properties, which is a major change from the previous law. Previous law, if I have two houses and both I'm self-occupying, one will be treated as self-occupied, another is treated as deemed to be let out. Now the law changes. It is It is only one proper. It is two properties. Both the properties can be self-occupied. So only if there is a third house that will be treated as deemed to be let out. But this has been changed. The maximum interest deduction remains to be 2 lakhs, which means for both the properties put together, the maximum interest a person can claim cannot exceed 2 lakhs. It is restricted to 2 lakhs. That is the other aspect which need to be understood. That is, the maximum interest deduction is restricted to 2 lakhs. Okay. So one other aspect of it which we need to understand in this. And the another amendment is where the house property is held as stock in trade. This is for builders, real estate people. NAV will be nil for 2 years from the end of the year in which construction is completed. NAV will be nil for 2 years from the end of the year in which construction is completed. This amendment tells you that is, if today 8th November 2020 I complete the construction of the house. Remember, 8th November 2020 I complete the construction of the house. I as a builder, or if I hold it as stock in trade, from this the year end is 31/3/21. From here the year end is 31/3/21. Up to 31/3/23 I can claim it as nil. Up to 31/3/23 I can claim it as nil. So 2 years from the end of the year in which construction is completed. Okay, so this is the second amendment. Otherwise, we know how to compute house property income. We take MV and FRV, compare whichever is higher. That answer with SR, whichever is lower. That answer with AR, whichever is higher. Okay, so that is known as my gross annual value. If standard rent is not available, then directly whichever is higher. Municipal taxes will be allowed as deduction only if it is paid during the financial year. If it is paid in advance, it will not be allowed, but if past years are accumulated and paid, then it is claimed. Municipal taxes paid by the tenant will not be allowed. Only it should be paid by the owner. In case of self-occupied property, AV will be nil. This benefit can be claimed for two properties. Standard deduction is 30%. Okay. Interest on borrowed capital 2 lakhs for self-occupied property. For let-out property, it is fully allowed. And if the loan is taken, that you leave this point because it is 20 years is over. Maximum housing loan is 20 years. But if the loan is taken for repairs or renewals, it is only restricted to 30,000. If the loan is taken for self-occupied property, if the loan is taken for repairs or renewals, then it is restricted to 30,000. Okay, right? Fresh loan taken to repay the old loan which has been taken for purchase of construction or repair, etc. The interest paid on fresh loan will qualify for deduction. In other words, loan taken to repay one other loan which I have taken for purchase or construction, it will be properly considered. It will be considered as if the new loan, the fresh loan is taken for construction or purchase, deemed loan. Pre-construction period interest, we all know, will be accumulated for 5 years. There are only two deductions I can claim, standard deduction and interest. No other deduction is possible in IHP chapter. No other deduction is possible in IHP chapter. Okay. As usual, let us start with the format of working. Let us start with the format of working. We all know the four things which we actually know. Sorry, expected rental value. We know the four things that will be taken. We know the four things that will be taken, and actual rent minus unrealized rent will be taken. Actual rent minus unrealized rent will be taken for this. Less. Okay. Vacancy allowance. Nothing but number of months into a rent. Okay. Vacancy allowance. You will hit at gross annual value. You will hit at gross annual value. Okay. Then less empty pay by the owner, actual pay including past years but not in advance payment. Okay, so that will be provided and you will arrive at net annual value. We will arrive at net annual value. we will arrive at net annual value, then uh, deduction under section 24, standard deduction 30% of NAV, okay, interest on borrowed capital, this total in the outer column, then I will get, okay, then add 70% of unrealized rent received, 70% of arrears of rent, okay, receive only on the basis of receipt, this is taxable, so that I will get income slash loss from house property. Format of, okay, computation of loss from self-occupied property. From self-occupied property, directly I will start with NAV. I will not have any other computation, nil. Deduction for interest restricted to rupees 2 lakhs slash in case of loan taken for repairs and renewals rupees 30,000. Okay, then I will have loss from house property, okay, okay. Now some of the notes. The total loss from house property, that is let out plus self-occupied, can be set off against any income. The total loss from house property, both let out and self-occupied property loss, can be set off against any income to the extent of rupees 2 lakhs. To the extent of rupees 2 lakhs, the total loss from house property, be it let out or self-occupied, to the extent of rupees 2 lakhs. Balance loss needs to be carried forward. Okay, balance loss needs to be carried forward. Okay, and loss from house property brought forward can be adjusted only against the income from house property. So, brought forward loss from house property, brought forward loss from house property can be adjusted only against the income from house property. Brought forward loss from house property can be adjusted only against the income from house property. Nothing else. Only against IHP it can be adjusted. As I answer the question, I will give you the more notes wherever essential. As we answer the question, we will understand it. Specify the tax treatment of unrealized rent recovered and arrears of rent. Okay, question 1. Okay, not only just recovery, I will also take this opportunity to tell you the treatment of unrealized rent, arrears of rent, etc. Okay, first I am going to speak about unrealized rent. Rent due but not received is known as unrealized rent. Rent due but not received is known as unrealized rent. This can be adjusted. Okay, unrealized rent can be this can be adjusted only if it is bona fide let out. That is, a person cannot let it out to his own son or his own company and say rent is not recovered, etc. Okay, unrealized rent will be allowed as a deduction from actual rent before going for the steps of computation. In other words, AR minus UR is equal to net rent. That will only be taken for the steps. That will only be taken for the steps. Unrealized rent will be allowed as a deduction from actual rent before going for the steps of computation. Okay, so it will be only first allowed and then only we will go to the 3 steps manners of compare MV and FRV, whichever is higher. Okay, that answer with SR, whichever is lower. That answer with net actual rent. So net actual rent is nothing but actual rent minus unrealized rent. Now I'm going to unrealized rent recovered, unrealized rent recovered, unrealized rent recovered. Okay, taxable in the year of recovery, taxable in the year of recovery, only in the year of receipt, not on accrual basis but on cash basis. Taxable in the year of recovery provided it is allowed earlier. Okay, suppose if the assessing officer has not allowed unrealized rent at the time of recovery, you will not tax it. So provided it is allowed earlier, at the time of recovery, my dear friends, at the time of recovery, this becomes taxable. Taxable in the year of recovery, provided it is allowed in any of the earlier years. Okay, it is allowed in the earlier years. Okay, standard deduction of 30% needs to be provided. In other words, 70% of unrealized rent recovered will become taxable. 70% will become taxable. The unrealized rent recovered will be taxable even if the house property is transferred before such recovery. As I said yesterday, even if the house property is not with you, even if you have transferred the house property, still the unrealized rent recovered will become taxable in the year of recovery. Arrears of rent. Increase in rent with a retrospective effect is known as arrears of rent. Okay, increase in the rent with a retrospective effect. It becomes taxable only in the year in which it is received by the owner. Only in the year it is received by the owner, it will become taxable. It becomes taxable only in the year in which it is received by the owner. Okay, right? Standard deduction of 30% will be provided. Okay, in other words, 70% of arrears of rent received will become taxable, and the next point also the same. Okay, arrears of rent will be taxable even if the house property is transferred before such recovery. Ovia is the owner of 3 houses. She claims all the houses as self-occupied. The following details are provided. Compute the income and tax due thereon. House 1, municipal value, fair rental value. House 2, municipal value, fair rental value. House 3, municipal value, fair rental value. In case of all houses, 10% of municipal value is municipal taxes which are paid. Interest paid for each house is 1,50,000 and principal repayment is 40,000 for each house. Her gross salary amounted to rupees 7,50,000. Read through. municipal value 11 lakh, 12 lakh, 9 lakh. Fair rental value 1 lakh 90,000, 1 lakh 10,000. 1 lakh into 12, 90,000 into 12, 1 lakh 10,000 into 12. GAV, whichever is higher, GAV, whichever is higher. So 12 lakhs, 12 lakhs, 1320 less MT paid. MT municipal taxes paid is 10% of municipal value. Okay, into NAV. Okay, treatment. Okay, this should be self-occupied. This should be self-occupied, and this should be let out. Treatment should be deemed let out. This should be deemed let out. Okay, the ones which where the NAV is higher should be treated as self-occupied, and the one where the NAV is lesser should be treated as deemed to be let out. Okay, I will write the theory here. As per the amended law, assessee is eligible to claim self-occupation for two properties. Okay, beyond two properties, it will be treated as deemed to be let out. In the given case, okay, H1 and H3 will be self-occupied and H2 will be treated as deemed let out. though it is coming to 1,50,000 per house, which means the total comes to 3 lakhs for two houses, but the maximum you can claim for self-occupied property is 2 lakhs. So the loss or the loss from self-occupied cannot exceed 2 lakhs. The loss from self-occupied property cannot exceed 2 lakhs. It is not exceeding, it is not exceeding 1,50,000. This falls under 80C. There is no other aspect as 80C mentioned. There is no other aspect of 80C mentioned. So, okay. Question 3. Housing loan was taken on 1st January 2018 for rupees 32 lakhs at 10%. Construction was completed on 1st January 2020. Repayment starts only from 1st April. Specify the tax treatment of interest portion of housing loan. So we are now focusing on pre-construction period interest. We are now, this question focuses on pre-construction period interest. Date of loan 1/1/18. Date of completion of construction 1/1/20. Year of completion 1920. That is this 1/1/20. 1st January 20 falls in the year financial year 1920 falls in the financial year 1920. Okay, therefore, year of completion, therefore, year of completion, sorry, therefore, pre-construction period 1/1/18 to 31/3/19. Therefore, reconstruction period is some 15 months because year of completion is 1920, which means it starts with 1/4/2019 and ends with 31/3/20. So any period before 1/4/2019. So the period ending up to 31/3/2019 is known as pre-construction period. Okay, therefore pre-construction period 1/1/18 to 31/3/19. Okay,
Sir,
Raja.
Abhias is waiting for your requested for entry, sir.
இல்லையே ராஜா யாரும் இல்லையே ராஜா
கால் பண்ணி பார்க்கலாம் சார்.
ஏன்னா லிங்க் இப்போ புதுசா அமைச்சிருக்கேன் அதுன்னு சொல்லினேன் கொஞ்சம். Yeah, he has joined. Yeah, he has just joined different. Okay.
Yes, sir. I'm there.
So, okay. So this is the pre-construction period 1/1/18 to 31/3/2019 is known as the pre-construction period. Let us understand it little more. Okay, little more. That is interest of FY 1920, which we call it as the current year interest or the financial 32 lakhs into 10%. 32 lakh into 10%. Let us keep it as A. Let us keep it as A. Interest for pre-construction period. Okay, for 17/18, which consists of 3 months only, which consists of, that is, it is from 1/1/2018. So first year ends on 31/3/2018. It will be again 32 lakhs into 10% into 3 by 12. Okay, for 18/19, the full year of 32 lakhs into 10%. Okay, so total PCP interest will be, okay, 4 lakhs. Total PCP interest will be 4 lakhs. Okay, so now for the FY 1920, assessee can claim, okay, interest of FY 1920, that is nothing but in our example A, plus 1/5 of interest of PCP interest, 1/5 of pre-construction period interest, that is B. So I can claim 3,20,000 plus 4 lakh divided by 5. Okay, that is 4 lakhs, where the property is let out, then the entire 4 lakhs can be claimed. As the property is self-occupied, then the maximum interest is restricted to rupees 2 lakhs.
சார் ஒரு நிமிஷம் ஸ்க்ரோல் அப் பண்ணுங்க சார்.
No, I have a doubt. For current year interest, we need not see date of repayment of loan
No,
amounts.
no, no. Any date of repayment is the starts only 1st April 20.
Okay. So for the entire year, we need all of them. Okay.
Question 3A. This is an important question because I believe that in objective type they will test. There are two house properties which are claimed as self-occupied by the assessee. Compute the maximum interest allowable in each case. Okay, two house properties, both are treated as self-occupied. What is the maximum interest that can be claimed? Case A. Okay, interest on loan taken for construction 150, interest on loan taken for repairs 50. Okay, house 1, okay, loan taken for construction, okay, 1,50,000. House 2, loan taken for repairs restricted to, okay, 30,000. So what you can claim, in this case is only 1,80,000. What you can claim, even though maximum 2 lakhs, but repairs இருந்ததுன்னா we can only claim 30,000. So 150 for one house, 30 for another house. So you can claim only 1,80,000, not 2 lakhs. You can claim only 1,80,000. Case B. Case B. Interest on loan taken for construction 150. Okay, house 2 also construction 50. Okay, right? Okay, 150. This is also taken for loan taken for construction, and it is 50,000. Okay, so you can claim the entire 2 lakhs. You can claim the entire 2 lakhs. Interest on loan taken for construction 150, and both the houses is for construction 150 150. Okay, both the houses is for construction 150 1,50,000. Okay, even though the total interest comes to 3 lakhs, but the maximum you can claim is only 2 lakhs. The maximum you can claim is only 2 lakhs. Case D. Interest on loan taken for construction 180. Interest on loan taken for repair. This is 1,80,000. This is, my dear friends, restricted to 30,000. This is restricted to 30,000. And the overall interest also you cannot claim to 10. You can restrict it to 2 lakhs. Please understand, there are two restrictions now I spoke about. One is loan taken for construction 180, that is okay, it has not exceeded 2 lakh. Loan taken for repairs, even though the question says 50,000, I cannot take 50,000, I can take only 30,000. So the total comes to 2,10,000, but the overall restriction I can have is only 2 lakhs. Explain a case where interest will be allowed as deduction even if principal amount is repaid in full before the commencement of the year. It's an interesting case. When will interest be allowed even if the principal amount is repaid? Okay, case E, understand, loan taken for construction, let us take some 1617. Construction completed and principal amount is also repaid in 1920. Okay, for the pre-construction period, interest, it can be claimed in 5 equal installments. Okay, we all know pre-construction period interest can be claimed in 5 equal installments. Pre-construction period interest can be claimed in 5 equal installments. So even though the principal amount is repaid, the interest will continue to be claimed for the remaining period. Okay, so current year interest will not come because the principal amount is repaid. Current year interest will not come, but the pre-construction period interest will be continuing to come. DJ owns a house in London which has been let out at a rent of 3,000 euros per month. The house was vacant for 1 month during the previous year and 1 month rent is unrecovered. DJ paid municipal taxes of 5,000 euros. He had borrowed money for the purpose of construction and interest paid on the same 11,000 euros during the financial year, taking on an average 75 per rupee. Okay, euro conversion 75, compute IHP. You also understand that municipal taxes is not allowed as deduction as per UK computation laws. Okay, for a ROR, global income is taxable. Okay, wherever income is earned, the same becomes taxable. Okay, so rent received from a property located outside India is taxable for ROR. Rent received from a property located outside India is taxable for a resident and ordinary resident. Okay, The basis of computation is as if the property is in India. In other words, irrespective of the laws of computation prevailing outside India, we will be computing as if the property is in India. 3,000 euros into 75 into 12 months. You should have actually got 3,000 into 75 into 12. Okay. Less unrealized rent is 3,000 into 75. So you get expected rental value. You get expected rental value. You get expected rental value 24 lakh 75,000 less. Okay. Vacancy allowance 1 month. Okay. Again 3,000 into 75. So I get now what is popularly known as, okay, gross annual value. Okay, gross annual value will be, okay, 22 lakh 50,000 less MT paid will be allowed as per IT law of India. Okay, it is 5,000 into 75 rupees. So I get a net annual value. I get a net annual value of 18 lakh 75,000. Standard deduction at 30%. Standard deduction at 30%. Interest on borrowed capital, okay, I think 11,000 euros into 75, okay.
Sir, I have a doubt, sir.
Go ahead with your doubt.
If this is the only property he owns, then it can be claimed for self-occupancy.
No, if he has actually let it out, you cannot claim it as self. If he has locked it up, then
No, sir, I'm asking if this is the only property he has.
I'm also
Okay,
answering
sir.
your question. Even if it is the only property he has and he has actually let it out, where is the question of self-occupation?
No, sir. Only house property he has. It is not. I'm not asking that it is being let out or not.
Yeah, if this is the only house property he has, it is self-occupied. No, and he has not let it out, it is self-occupied.
Okay, sir.
Okay. Palnichami is the owner of 5 different units, one house divided into 5 different units. Total municipal value, unit 1 let out for 20,000 and unit per month, and 1 month rent remains unrealized. Unit 2 let out for 20,000, it has remained vacant for 23 months. Unit 3 let out for office purposes 25,000 and the tenant agrees to pay municipal taxes. Unit 4 is used as godown for rent 30,000. Unit 5 remains locked up. PC is already claiming self-occupied for other houses which are having higher value. So this unit 5, even though it is locked up, it will be considered as deemed let out because he is already claiming the self-occupation for 2 different houses. Okay, the total value of the house is total for house 1,25,000. Actually, I should have put total municipal taxes. I missed that word here. Kindly put total municipal taxes for the house is 1,25,000, out of which 50% is paid, including that which is paid by the tenant for unit 3. Interest paid for the whole of the house property 9 lakhs and repairs during the year amounted to rupees 5 lakhs. Okay, this is in the total municipal taxes. Question is yours as a homework. Question is yours as a homework, please.
Sir,
Listening.
there's no deduction for rent, right? Like, sorry, repairs.
Once more.
There is no deduction for repairs, right, sir?
No, there's no.
Only
Nothing.
Yeah.
Only 2 deductions possible: standard deduction and interest. Repairs, insurance, anything
Yes,
you
sir.
cannot claim.
சார் அந்த இன்ட்ரெஸ்ட்டுக்கு வந்து ஸ்டடி மெட்டீரியலில் வந்து அந்த செல்ஃப் ஆக்குபைட் ப்ராப்பர்ட்டி வந்து 5 இயர்ஸ்க்குள்ளே கன்ஸ்ட்ரக்ஷன் பண்ணி முடிக்கலன்னா 2 lakhs எடுக்க முடியாது, 30,000 தான் எடுக்க முடியும்னு ஒரு ரூல் போட்டிருக்காங்க சார்.
அப்படி சொல்லிருக்க மாட்டாங்க. 5 இயர்ஸ்க்குள்ள கன்ஸ்ட்ரக்ட் பண்ணி முடிக்கலைன்னா பிசிபி கிளைம் பண்ண முடியாதுன்னு சொல்லியிருப்பாங்க. கரெக்ட்?
இல்லை சார், அந்த 2 lakhs வந்து 30,000 போட்டு இது பண்ணியிருக்காங்க சார்.
நான் பார்த்துறேன் இந்த பிரேக்ல. டிசிபி கிளைம் பண்ண முடியாது. ஓகே, பட் எக்ஸாமினேஷன் ஓரியன்டா டோன்ட் வரி அபவுட் இட். அதுக்கு வந்து எக்ஸ்டென்ஷன்லாம் கிளைம் பண்ணலாம். அதுக்கும் அதே லா. பட் ஐ வில் ஜஸ்ட் செக் இட் அண்ட் கம் பேக் டு யூ டியூரிங் தி பிரேக்.
எஸ் சார்.
Sir, I guess Vijay is waiting to join the meet.
ஏன் லேட்டுன்னு அப்புறம் கேட்டு சொல்லு.
அவகிட்டே கேளுங்க சார், ஒன் டவுன்ல.
குட் மார்னிங் சார்.
விஜி, என்ன இவ்வளவு லேட்டா எழுந்துக்கிறது?
சாரி சார், தூங்கிட்டேன் சார், நைட் லேட் ஆயிடுச்சு.
ஒரு காலத்துல நம்ம 6 மணிக்கு கிளாஸ் ரூம்லயே இருந்தோம்.
எஸ் சார்.
எத்திராஜ் காலேஜ்ல செவரேரிலாம் குதிச்சு வருவியோ?
அந்த பயத்திலேயே அங்கேருந்து வெளில வரணுன்னே வந்துருவேன் சார் கிளாஸ்க்கு.
So, IFOS, friends. The next chapter is IFOS, okay, which is again a smaller chapter to concentrate. Okay, what is IFOS? Any receipt which is treated as income. Repeating, any receipt which is treated as income, which is not taxable under any other head, which is not taxable under any other head, which is not exempt, is taxable here. Any receipt which is regarded as income, okay, so it should be a receipt. Loan is a receipt, but it is not treated as income. Any receipt which is treated as income, which is not specifically exempt, which is not taxable under salaries, house property, business or profession, or capital gains, will be taxable under IFOS. Residuary head. Residuary head. Okay. Receipt not regarded, regarded as income, not specifically exempt, not taxable under other four heads. Okay, then it is taxable under IFOS. But having said that, there are some specific items which are mentioned here. There are some specific items which are mentioned here. A quick brush through of these things. Dividend from an Indian company. Normally, this is exempt under section 1034. Okay. However, if the aggregate dividend exceeds rupees 10 lakhs, it is taxable at 10% for any assessee other than company. For us, only assessment of individuals. So, more than 10 lakhs, up to 10 lakhs, it is exempt. More than 10 lakhs, section 115 BBDA taxes it at 10%. Okay, you cannot claim any expenditure. Okay, no expenditure can be claimed against such dividend income. No expenditure can be claimed against such dividend income. Dividend from foreign company, fully taxable. Fully taxable. Okay. Interest on securities, be it investment, deposit, loan, savings bank. However, where securities are held as stock in trade, it goes to PGBP. Collection charges and interest on borrowed capital is allowed as deduction. Where interest, net interest is provided, then gross it up. Yesterday I told you the formula, divided by 90 into 100. Divided by 90 into 100. Winnings taxable at 30%. No deductions will be allowed. Cannot claim any benefit, including, I told you yesterday that suppose, okay, suppose my other income taxable at normal rates is less than 2,50,000. Interest taxable at normal rates is less than 2,50,000. That deficit can be claimed. That deficit can be claimed against STCG, LTCG, but it cannot be claimed against winnings. In other words, winnings, even if it is just 50,000, and that is the only source of income for you, it is taxable. You can claim rebate under 87A, but you cannot claim that set off of slab limits. Rent from letting out of plant, machinery and furniture, it is an income. Direct expenses will be allowed. Royalty income, direct expenses can be allowed. Whenever we read royalty, we remember 80 QQB, 80 RRB. For authors, for patents, both are 3 lakhs. Sitting fees, agree income from outside India, income from subletting of property, interest on income tax refund, family pension, interest on compensation for compulsory acquisition, 50% will be allowed. Shares issued at a premium, provision only for companies. If premium is more than fair market value, so it is only for companies. Even the amendment is now only for companies. Since company assessment is not there, we can safely put it aside. Read through the page once.
So,
Listening, Sai Lakshmi.
so it's closely held, meaning unlisted companies.
Unlisted companies. Then comes the major gift. First read this page.
Sir,
Yeah.
section 115O section 115BBDA को என்ன relationship sir?
Section 115O, dividend distribution tax, which is only for companies. Section 115BBDA is for the recipient. So completely different.
Okay sir.
நமக்கு section 115O கிடையாது. நீ ஃபைனல்ல கூட படிக்க முடியாது, ஏன்னா இந்த வருஷத்தோட அந்த செக்ஷனை ஸ்கிராப் பண்ணிட்டாங்க.
Okay.
வருத்தப்படாதே. Coming to taxation of gift. Okay, divided into 3. Gift is divided into 3. Monetary, gift of movable property, gift of immovable property. Repeating, monetary gift, gift of movable property, gift of immovable property. Okay, மூணுத்துக்குமே limit is 50,000. If it exceeds the limit, the whole amount is taxable. For all the 3, limit is 50,000. If it exceeds 50,000, the whole amount is taxable. So monetary, the same. Non-monetary, immovable property, stamp value, movable property, fair market value. In both immovable and movable, there is one other provision called inadequate consideration. Difference between stamp value and consideration paid, or difference between fair market value and consideration paid in the case of movable. If that inadequate consideration exceeds 50,000, whole of the inadequate consideration becomes taxable. Shall I repeat? If that inadequate consideration exceeds rupees 50,000, whole of the inadequate consideration becomes taxable. Okay, and we have written in our notebook that 5% tolerance limit which I was telling you yesterday evening. Capital gains, we wrote the 3 columns and the date on which stamp value should be measured. Okay, so that is one thing which we have to remember. And the exceptions are wedding, relatives, under will, that is inheritance, and from a registered trust.
Sir, movable property other than jazz, jewelry, painting, all that is not taxable, sir.
Not taxable. Okay. Suppose if car is gifted to you, reverse the bill. Suppose if you gift me a car, don't worry, for me it is not taxable.
Okay, sir.
Sir,
Yes, ma'am.
so you gave one consequential amendment in capital gain regarding gift loss. So can you explain that, sir? When gift is taxable under this provision, then value of gift will become the cost of
Yeah.
acquisition.
Okay. So let us take that Mr. X gives a house property to Mrs. X. Okay. This is not taxable. Okay. Mrs. X. So this is not taxable for Mrs. X. This is not taxable for Mrs. X because gift is from relative. This because gift is from relative. Subsequently, when Mrs. X sells the property, okay, cost will be the COA of Mr. X, that is cost to the previous owner. Cost to the previous owner. Okay. So we know Manjula, Jesha, etc. will be applied. Okay. The sale value will be clubbed in the hands of X, Mr. X. Okay. That is an additional thing. Okay. Suppose I give another example. Mr. X gives a house property of rupees 40 lakhs to Mr. Y. Mr. X gives a house property of rupees 40 lakhs to Mr. Y. This is a circumstance where Mr. X has gifted a house property of worth rupees 40 lakhs to Mr. Y, his friend. Okay. Now, this is taxable for Mr. Y. This is taxable for Mr. Y as the value exceeds rupees 50,000. Whole of rupees 40 lakhs becomes taxable. So Y will pay in the year in which he receives the gift. Y will pay in the year in which he receives the gift tax for rupees 40 lakhs. Considering this 40 lakhs in his income sheet, okay, we would have paid tax. Subsequently, when Mr. Y sells the property, cost of acquisition will be rupees 40 lakhs because as if he has purchased the property for 40 lakhs, because for that 40 lakhs I have already paid tax. Don't ask me to pay the tax again. Cost of acquisition will be 40 lakhs.
Okay.
So where gift is taxable, the consequential amendment is Cost of acquisition will be the cost considered in the books of the recipient or the buyer.
So for income from subletting, is the rent allowed, rent paid allowed as deductions?
Two schools of thought. One says yes, another says no. Please say no and write an alternative answer. This may be claimed as deduction.
Okay.
Sir, why is sale value clubbed within the hands of Mr. X, sir?
இங்கே sale value இல்ல capital gains. Asset transferred to spouse without adequate consideration, income is taxable in the hands of transferor. That is the provision. Ramkumar, Pottukuttradara Raja. Mrs. Charanya Yashwant had a year of festivity and provides you the following gift. Cash gift of rupees 75,000 received from her friend on the occasion of her Shashtiyapta Purti, a wedding celebration celebrated on her husband completing 60 years of age. This also happens to be her 35th wedding anniversary. On the same occasion, a diamond necklace of 2 lakhs was presented by sister-in-law living in America. She celebrated her son's wedding this year and her close friend gifted 60,000 on the occasion of marriage of her son. Ramkumar, a student of Charanya, presented her with an iPhone which cost 75,000 for helping him secure All India rank. Ramji, a student of her, transferred 2,000 shares of public limited company 120 per share when the fair market value is 170 per share. Compute her total income after taking into account that she has invested 120 in PPF, 75,000 in NPF and medical insurance premium 40,000 on her health.
So gift of shares we have here is inadequate consideration.
Inadequate consideration.
Sir, is it like FMV more than the, premium of shares more than FMV?
Nurvati?
Sir, is it like premium more than FMV of the shares?
No. This is that is not, that is only for closely held companies. This is the purchase of shares, okay, at rupees 120 when the fair market value is 170. This is inadequate consideration. This is not issue of shares from a company perspective. This is for the individual.
Okay, sir.
NPSல பாக்கியை வந்து 80Cல எடுத்துக்க முடியாதா சார்?
முடியாது பராஜா. Part 1 consists of the mandatory contribution. Part 2 consists of voluntary contribution.
இப்போ எம்ப்ளாயி யார் இருந்து கான்ட்ரிபியூட் பண்ணா பார்ட் 2ல வரக்கூடாதா சார்?
எம்ப்ளாயியா கான்ட்ரிபியூட் பண்ணா பார்ட் 1 தான். Discuss the taxability or otherwise in the hands of the recipient as per the provision of Income Tax Act. MNS Private Limited, a closely held company, issued 12,000 shares at rupees 125. The face value of these shares is 80 and the fair market value is 110. This is what our friend was also asking. Okay, though this is probably not in our syllabus, but still. Okay, where a closely held company, that is unlisted companies, issues shares at a price higher than FMV, then the difference between issue price and FMV is taxable as income in the hands of the company. So in this case, issue price is, in this case, the issue price is 125. Okay, 125. Okay, FMV is 110. Difference, okay, is 15 per share and totally 12,000 shares are issued. Okay, so 12,000 into 15, 1,80,000 will be treated as income in the hands of the company. Mr. Arun received an advance of 56,000 against the sale of his house property. Due to non-payment of installment in time, the contract has been cancelled and was forfeited. Kindly change it to 1920. I forgot to change the year. Change it to 1920. Okay, advance money forfeited shall be treated as income in the year of forfeiture. Okay, so in the year of, in the given case, okay, rupees 56,000 will be treated as income in the hands of Arun for FY 1920. Okay, please change the year, the question. Okay, so in the year 1920, it will be taxable. Third question, Mr. Nitin transfers a house property to his son Mr. Raj without consideration. The value of house property is 12 lakhs as per registered sale. Nitin transferred house property to his son Mr. Raj. Okay. Okay. Gift from relatives is not taxable in the hands of receiver in the given case. Okay, Mr. Raj is not taxable for the house property received from his father. Okay, so when the property is subsequently sold, cost to the previous owner, Nitin will only prevail. Mr. Rakesh gifted a refrigerator. அங்கேயோடு நிறுத்திடலாம். Okay, we need not even study relative என்ன அப்படின்றதுலாம். Okay, refrigerator is not regarded as a movable capital asset for gift purposes. Provisions. Gift is the most popular question. Very simple, very straightforward, but most popular question.
So can you show the answers?
Sure. Sure. What is the impact in the hands of Mr. Rakesh for
What is the
refrigerator?
impact in the hands of
Rakesh for the refrigerators on the reasons?
nothing? Zero. Nothing. It's not a transfer of capital asset also. No impact.
Yes.
Question number 3. Sai Pratap gives you the following particulars. Compute his income and tax payable. Interest received from savings bank account, I will provide 80 TTA. 80 TTA, okay, 10,000 rupees needs to be provided. Agree income from Sri Lanka, taxable. Letting out of building, plant, machinery and furniture on a comprehensive basis, where composite rent is received. That is, you are unable to split what is for the house property, what is for the amenities, then whole of the income is always taxable under IFOS. 60,000 per month, repairs to plant, depreciation, security charges, maintenance charges, all direct expenses will be allowed. Dividend up to 10 lakhs not taxable, balance taxable. He proposes to sell his land and received 1% advance. The sale did not go through. Money is forfeited. He contends it's a capital receipt. No. Winnings from Davy game show, motorbike worth 120, taxable. Winnings in kind, fair market value, taxable. Family pension received. Interest on delayed receipt of enhanced compensation, 50% allowed as deduction. Received 1 lakh from public charitable trust. Received 1 lakh from public charitable trust. It is not taxable. Together work, please. இவ்வளோ சீக்கிரம்
Sir, if it is not a composite let out also, we will follow the same only, no, sir? What is the...
Temporary letter. Yes, yes, yes. சும்மா எனக்கு அது தெரியும்ன்றது உனக்கு சொன்னேன் அவ்வளவு.
சார் அக்ரிகல்ச்சர் இன்கம் ஸ்ரீலங்காலே வந்ததுனால கிடையாது சார்.
ராஜா,
அக்ரிகல்ச்சர் இன்கம் ஃப்ரம் ஸ்ரீலங்கா அது கிடையாது. அந்த பேசிஸ்
we have taken agricultural income from India தான் நம்ம வந்து அந்த aggregate பண்ணணும்.
ஓகே.
From outside India it is taxable as any other income.
Yes.
ஒரு क्वेश्चनல எதுவுமே கொடுக்கல, வெறும் இன்ட்ரெஸ்ட்னு கொடுத்திருந்தா நம்ம சேவிங்ஸ் இன்ட்ரெஸ்ட் எடுத்து டிடக்ஷன்
எடுக்க கூடாது. இல்ல, சேவிங்ஸ் இன்ட்ரெஸ்ட்னு ஸ்பெசிஃபிக்கா சொல்லிருக்கணும். So only one question as homework you are carrying on that PC Panichami sir's question. We are moving into clubbing. Clubbing of income. Clubbing means that is taxing not in the hands of the recipient but in some other person's hand. Taxing not the person who received it, but the earning belongs to somebody else. That is what is the clubbing provision all about. Okay, people, in order to avoid taxes, evade taxes, were carrying on lot of activities to check those things. These provisions are introduced in the law. To check those things, these provisions are introduced in the law. The most popular in this is minor income will be clubbed in the hands of either father or mother of the child, whosoever income is higher before such clubbing. That is the most popular, but there are things like asset transferred to spouse, to daughter-in-law, spouse working in a concern in which the assessee has substantial interest, and the very popular revocable transfer, that is retaining right, not actually transferring without, without any condition, transferring just for the aids of law. Okay, so all those things. Asset transferred to spouse without adequate consideration, to daughter-in-law without adequate consideration, to any person, beneficiary being spouse or daughter-in-law, to any person retaining the right over the asset or income over the asset, excisable during lifetime. Not excisable during lifetime is not revocable transfer. In all the above cases, only the transferor is taxable. Only the transferor is taxable. Remuneration of spouse from a concern in which assessee has substantial interest, 20% or more along with relatives, will be clubbed in the hands of the assessee. Where both of them have substantial interest, will be clubbed in the hands of whoever income is higher before this particular income, before this remuneration, that is the other source income, whoever is higher, will be in their hands, it will be clubbed. However, where spouse earns income due to technical skill or qualification, the provisions will not apply. Cross transfers. Two transfers takes place in an interconnected manner, that income will be taxable, then income will be taxable in the hands of transferor. Minor son, income will be clubbed in the hands whoever is higher. Where parents got divorced, it will be in the hands of caretaker. Clubbing will not apply if minor earns through manual labor, technical skill, or minor suffering from disability. Exemption of 1,500 to be provided. Read through.
Sir, can you explain cross transfer with an example, sir?
Very good. I can do so. So, Vathson transfers to PC Sir's son 5 lakhs. Normally, this is a income. Whatever income is earned out of this 5 lakhs is taxable only for PC Sir's son. Okay. So, Vathson transfers to PC Sir's son Sriram 5 lakhs. Okay. Normally, income will be taxable in the hands of Sriram only, or it will be clubbed if it is a minor, etc. But the transaction happens like this. Vathson transfers to PC Sir's son Sriram 5 lakhs. PC Sir transfers to Vathson's brother's daughter Shrija 5 lakhs. Interconnected transfers. Okay. What is Vathson trying to do? Vathson, if he directly transfers to Shrija 5 lakhs, the income is taxable in his hands. So what he tries to do is, he gives it to another person and say, you transfer. You transfer. So, two transactions are interconnected. two transactions are interconnected, the income from respective transactions will be taxable in the hands of transferor. Okay, the two transactions are interconnected. Income from respective transfers are taxable in the hands of transferor.
So generally they cannot find out this, no sir, unless they.
நம்ம கிளாஸ் ரூம்ல வந்து இது மாத்திரம் சொல்லலாம், லீகல் இன்கம் டாக்ஸ் மாத்திரம்.
Okay sir.
அப்படி முடிச்சிட்டு செட் ஆஃப் பார்க்கலாம்.
சார் இப்போ நீங்க பண்ண கிராஸ் டிரான்ஸ்ஃபர்ல இருந்து இன்வெஸ்ட் பண்ணி இன்கம் வந்தா அது வந்து
ஆமா taxable in the hands of the respective transfer.
டிரான்ஸ்ஃபரரா இல்ல their respective லைக் இப்போ நீங்க ஸ்ரீராமுக்கு டிரான்ஸ்ஃபர் பண்ணா அதுல இருந்து வர இன்கம் உங்களுக்கு
respective transferor. நீ கேக்குறது எனக்கு புரியுது. Is it in the hands of PC and Vathson for Sriram and Shrija? No. Sriram's income Vathson, Shrija's income PC. அப்படி வரும்.
Sir, but
ஒரு நிமிஷம், ஒரே ஒரு நிமிஷம். One minute, friends. Yeah, ask your question.
சார் பட் புக்ல வந்து பிசி சார் கிட்ட டாக்ஸ் பண்ற மாதிரி கொடுத்துருக்கு சார்.
பிசி சார் இல்ல ரெஸ்பெக்டிவ் ட்ரான்ஸ்ஃபர். நான் இப்போ கூட ஃபைனல்ல ஒரு क्वेश्चन அந்த மாதிரி வர்க் பண்ணேன். ரெஸ்பெக்டிவ் ட்ரான்ஸ்ஃபர் ராஜா.
Okay sir.
Some Ritanya, you are okay?
Yes. So you said when the asset like is transferred to a daughter-in-law, and if she earns an income, sir, that income will be taxable for her only the once.
Income will be taxable in the hands of transferor. Ramkumar, ऐसा पेशने ना अड्डोंगो पड़ो.
So, but is it subsequent income arising from that will be taxable? With
subsequent accruals are not taxable.
That means if they invest that income somewhere, then if they get an income like interest, means it will be.
It will not be. See, direct income is taxable. Income on income is not taxable.
Okay, sir.
Hi Charanya, welcome. You have something to tell for them?
No, nothing, sir. I just thought I'll tell a hi.
Friends, channel now is there from United States.
I see 41, sir. Here.
Joe Biden is now the president.
I know you will pull the election. And your cousin is the vice president, huh?
Yeah. Yeah. Ama. Bayangara.
41 of them are attending. Big number for you.
If you look at the participants, it includes you and me.
I am presenting to everyone now. You are presenting now. Okay.
Yeah. So only
41 is a big number, sir. Very closer to the exam, still people have come. Great man you are.
Because if it is closer to the exam, they have come. If it is away, why will they come?
When is the exam, sir, actually? Something has come.
You can instead ask me what Trump will do. You are asking a question which we never know the answer. We are assuming that it is going to be on November 21st starting and we are studying. In fact, எங்களுக்கு tax படிக்கிறது ரொம்ப பிடிக்கும் because it is tax law.
Ayyo. I see.
Yeah.
Kerala friends are also there. I'm seeing them. Okay,
Yeah,
good.
they are there. Siana, Naji, Rania are all attending actually.
Syllabus எப்போ சார் முடிக்கிறீங்க டாக்ஸ்?
யூஎஸ் டாக்ஸா?
இல்ல நீங்க ரொம்ப நாளா எடுத்துட்டு இருக்கீங்களே என்னெல்லாம் மிரட்டி முடிக்க வச்சுட்டு அதான் கேட்டேன்.
Okay. We enjoy tax. That's why.
Right.
Friends, we'll start with the clubbing provisions. Maneksha, a resident assessee, in September 2019 sold a vacant land for 50 lakhs when the stamp value of was also 50 lakhs. The land was acquired in 2015 April for 7 lakhs. The sale consideration of 50 lakhs the sale consideration of 50 lakhs were distributed to spouse, major son, daughter-in-law, married daughter and minor daughter equally. All 10 lakhs. Please understand it's 50 lakhs distributed to spouse, major son, daughter-in-law, married daughter and minor daughter equally. They had all deposited the same and earned interest of 1,80,000 each. Compute the income assuming he has no other income and the tax. It's a finest question to do. Read through. Sheet 15, 16.
Sir, 1 minute, sir.
$254.
This is our gross LTCG. Computation of total income of Maneksha. Okay. Capital gains. LTCG as computed. We will take the same amount. I hope he has not made any investment. Yeah. 2 IFOS, clubbing of income. Interest earned by spouse from transfer made by Maneksha. Okay, so that 1,80,000 is taxable in the hands of Maneksha. Okay, interest earned by daughter-in-law from transfer made. Okay, again 1,80,000. Interest of minor child 1,80,000 less exemption 1,500. So, okay, 1,78,500. So the whole point is these two are spouse, daughter-in-law. Income of minor child is a separate provision as such. It is not coming under asset transfer to minor child. Income is taxable. Andamari provision. Any minor child income will be taxable in the hands of the parent, whoever income is higher. We assume that Maneksha's income is higher, and we are taxing in the hands of Maneksha this. Okay, now please understand, son and married daughter's income, even though it is from the transfer made by Maneksha, income earned by son, major son and married daughter from the asset transferred by father will not be clubbed, and it will be taxable in their respective hands only.
So from this 180, subsequently if they earn income, then it will be in the respect.
Yeah, very good. So subsequent accrual, which will not be clubbed, it will be taxable in their respective.
Okay.
Sir?
Raja?
Sir, after, if suppose it was only 5 lakhs, then we would have claimed 87 years, sir.
Which one? If the total income is not income taxable at normal source, total income.
Okay, sir.
Question number 2. Kalpesh transferred rupees 40 lakhs to his brother's wife. She has deposited and earned interest of 2 lakh 10,000. Kalpesh brother transfers 50 lakhs to Kalpesh son. This was deposited and Kalpesh son earned an income of 225. Specify tax treatment. The common transferred fund is only 2 lakh 10,000. Is only 2 lakh. You cannot club the the common transferred fund is only 40 lakhs. The common transferred fund is only 40 lakhs. Okay. I hope the class understand. He transfers 40, he transfers 50. So that remaining 10 lakh, I cannot tax it in the hands of the transferor. I told you in the example, okay, if I transfers to PC sir's son, it will be taxable only in his hands. Whatever is the cross transferred amount, whatever is the cross transferred amount will be taxable in the hands of the respective transferor. It will be taxable in the hands of the respective transferor. So here the cross transferred amount is only 40 lakhs. Okay. Question number 3. On 1st April 2018, Arjun started a business with a capital of 12 lakhs. For the year ended 31st March 2019, Arjun made a loss of 2 lakhs, so the opening capital becomes 10 lakhs. Rasika, wife of Arjun, won a lottery for 40 lakhs on 1st April 2019. She gave 20 lakhs to Arjun and another 20 lakhs to her daughter-in-law. Arjun invested in business, daughter-in-law invested in bank. For the year ended 31st March 2020, Arjun earned a business income of 11 lakh and Rasika's daughter-in-law earned interest income of 2 lakh 12,000. This apart, Rasika had earned a salary after standard deduction 8 lakh 10,000. Compute the income of Arjun and Rasika along with tax payment. In the year 2021, Her daughter-in-law invested the interest income and earned further 1 lakh. What will be treatment? We all know that the last one I spoke about, I'm speaking about subsequent accrual. Okay, first we will focus on 1920 and then come to 2021. First, some working notes. Any business income of 1920 should be bifurcated between Arjun and Rasika, between the spouse, in the ratio of their capital contribution. So Arjun's capital is 10 lakhs, Rasika's gift is 20 lakhs. So any business income of 1920 should be in the ratio of 1:2. Okay, should be in the ratio of 1:2. Please remember, set off of loss of 1819, 2 lakhs. Okay, taxable business income is 9 lakhs. Okay, income of Arjun is 9 lakhs into 1 by 3. Income of Rasika is 6 lakhs. That is in the ratio of 1:2.
So can you scroll up?
Shall I?
Yes, sir.
1 minute. Salary is there. I missed it out. I'm writing here, but in the examination, this should be the first head.
Sir, financial year 1920s.
Okay. Arjunku, work out the tax and then say rebate. Okay. Arjun, don't, I know 3 lakhs nil, but first to work out the tax and then say rebate. Okay. Base tax for Arjun will be, okay, 3 lakh minus 2 lakh 50,000 into 5%. Okay. Yes. Rebate under section 87A, that entire 2,500 goes away. Okay. For Rasika, income taxable at normal rates will be 5622 minus the winnings amount of 40 lakhs. Okay, winnings taxable at 30%. Winnings taxable at 30% is this 40 lakhs. So for her, the base tax will be, okay,
Sir, an asset transfer to spouse or daughter-in-law, it includes monetary transfer also.
Asset includes cash, right? Is cash not an asset?
Yes.
So we'll not have surcharge here, sir.
Thanks for making the correction. Yeah, we should have surcharge. I should have worked out surcharge.
சார் கொஞ்சம் ஸ்போர்ட் அப் பண்ணுங்க சார், ஒரு நிமிஷம்.
Question 4. During the previous year, the following transaction occurred in respect of Mr. A. Mr. A had a fixed deposit of 15 lakhs in Bank of India. He instructed the bank to credit the interest on deposit to the savings bank account of Mr. B, son of his brother, to help him in education. Transfer of income without transfer of asset. Transfer of income without transfer of asset, the income is taxable only in the hands of transferor. The income, okay, so this income will be taxable only in the hands of Mr. A. If Mr. A really want to benefit B's son, he should have transferred the asset itself, deposit itself. Transferring interest is not going to make him not pay the tax. He is liable for that income. Mr. A holds 75% in a partnership firm, receives a commission of 250 from the firm for promoting sales of the firm. Mrs. A received a commission of 250 from the firm for promoting sales. Mrs. A does not possess technical or professional qualification. Income from a firm in which the spouse, income from to spouse or remuneration to spouse from a firm in which assessee has substantial interest, 20% or more, is taxable only in the hands of the transferor or the assessee. Mr. A gifted a flat to Mrs. A during the previous year. Mrs. A earned a rent of 12,000 from the flat. So, what is the interest income? 15 lakhs into 9%. All are standalone cases, not going to compute total income, just writing the amount. Okay, remuneration to spouse from a concern in which assessee has substantial interest. Okay, 20% or more will be taxable in the hands of the assessee. Okay, will be that. However, where the remuneration is earned due to qualification or technical skill, clubbing provisions will not apply. In the given case, okay, it is specifically mentioned that Mrs. A does not possess such qualification or skill set. Hence, commission will be clubbed in the hands of Mr. A gifted a flat to Mrs. A on 1st April 18 itself. During the year 1920, Mrs. A earned a rent of 12,000 per month. Remember, okay, what needs to be clubbed in the hands of Mr. A is the income and not rental receipt. So we should compute the income. Okay, rent is, as you all see, 12,000 into 12. Standard deduction, because they have not given municipal taxes, etc. Okay, I give standard deduction. Income to be clubbed. Okay, income to be clubbed is this amount. Okay, the chapter name is not clubbing of receipt. The chapter name is clubbing of income. Okay, suppose losses arises. Should it be clubbed? Yes. According to general clauses law, profit includes losses, income includes losses. Okay, so you should also club losses. So in this case, compute the income. In our regular class also, I have told you, if there is a capital gain, sale of asset, first compute the capital gain and then club it. In the last question also, we computed the business income after setting off losses and then only clubbing off income. I'm taking a break now. We will take a break now. Time in my system